when I go and get access to lines of credit, I go into the financial institution for the most part, and I'll sit down with the banker. I'll explain my business to them, really build that rapport with them, that personal relationship, so they know exactly who you are, what your business needs are. And that's setting a precedent in terms of a relationship, because you really have to think, okay, for me to get what I want from the bank, how do I position myself to get that, right? And you always have to position it as a partnership. It's not a finesse, it's a partnership. So partnerships are mutually beneficial. So you want something from the bank, you want credit cards, loans, lines of credit, and what does the bank want from you? That's what you really have to think about it. And what can you give to the bank? Now, what the bank wants your business. So they want your deposits. They want your inflows of income streams, merchant services, there's insurance, and they want you to use their credit products because they're going to earn transaction fees as well as, interest, if you're carrying balances. So you really got to explore multiple relationships with the financial institutions. That's why a lot of financial institutions have relationship rewards. The more embedded you are with a financial institution, the more you're going to be able to get from that financial institution, because you're more invested in the relationship. When you have multiple accounts with them, maybe personal accounts, business accounts, insurance, merchant services, credit cards, loans, so the more deep the relationship is, the more you're going to be able to do. And so when people are approaching the bank, another thing I wanted to point out before I get to that point, the bank needs deposits, right? Because based off the fractional reserve system, that's how banks operate. The banks have to hold a certain amount of deposits in relation to the amount of loans that they can issue. So the fractional reserve rate, and I'm not 100% sure, but it was something around like 10%. It might be even lower than that now. But basically, let's say if the bank has $1 million in deposits, they can loan out 10 million. So they can loan your money out over 10 times over. So the way that you position yourself to benefit from your banking relationship is to have deposits with the bank, because what is that doing? That's enabling the bank to grow their lending capacity. So by you having, let's say, $1,000 in the bank, or 10,000, let's say just 1,000 for illustration purposes, you're enabling the bank to issue out $10,000 worth of loans. So you're helping the bank expand their reach more customers, and earn more interest and fees. So you really got to position yourself to be an asset to the bank. Now, when people are coming and approaching the bank, like, let me try to lie about my information, or use a CPN, or use trade lines to inflate my credit worthiness, that's not building a relationship, right? That's one-sided. And that's a lack of financial integrity when you're trying to deceive the financial institutions and you're only looking at it one-sided. And so when you position yourself that way, the bank is going to look at you like, okay, you're a risk, because what are you bringing to us except for risk, right? You're not bringing deposits, which is the main thing that they're looking for, having that deposit relationship, because you have some skin in the game. When you don't have skin in the game, you're just risk, and banks can see that from a mile away. If you have bad credit and you're not bringing deposits, those aren't the types of customers that the bank wants to deal with. So you really got to look at it as a partnership. When I go in the bank, they know who I am. The tellers know who I am. It's not like I'm trying to hide who I am, or, I'm coming with some type of false pretense just to extract resources from the bank and bring nothing in return. And so the relationship banking has really opened up a lot of opportunities for me. It's enabled me to have over 7 figures in available credit, so I can just go out here and do whatever it is that I want. Now, the last point I wanted to make is having financial integrity, right? Because again, your credit score is much more than just a numeric number. Your credit score is your reputation. So when you have a bad reputation, it's going to limit the amount of opportunities that are available to you. When you have a good reputation, you're going to have much more access. So when people have bad credit and, bad financial habits, don't value relationships, you're going to have less access for different opportunities, whether that's, financial or business relationships, social relationships. So having a good reputation is everything, because the people who don't have good financial reputations wind up poor. And I see a recurring thing where, people will just keep tarnishing their financial relationships and then get to the point where you have no resources to lean on. The best thing you can do is have good credit, build a banking relationship as your financial situation starts to improve, because my philosophy is the more financial resources you have, the more money you can make, and your relationship is going to be able to grow. And this does take time. It's not a get rich quick scheme. Let me throw some trade lines, let me add a couple vendors and then try to get a loan. That's not the game right there. And anyone who's telling you otherwise doesn't really know the process, right?